Okay, so you know how everyone's kind of freaking out about crypto right now?
Uh-huh.
I'm not going to lie. I've looked at my portfolio a couple times this week and thought, is this it? Is this the big one?
It's funny how quickly that fear creeps back in, right? Like every little dip, everyone starts yelling, bear market.
Right. And it's like, yeah, we know dips happen, but it's still scary.
Yeah.
And there's so much noise out there. It's hard to know what to believe. But I was reading something super interesting the other day.
Yeah.
Apparently, over the past almost 70 years, stocks have actually done worse in the year before recession than during the recession itself. Isn't that crazy?
It is pretty wild when you think about it. Like the anticipation of the crash is actually worse than the crash itself. It just shows you how much psychology plays into all of this. And speaking of psychology, we saw some pretty huge Bitcoin long liquidations this past week, like the biggest since that whole choke point FTX mess.
Oof. Yeah, that was not pretty.
Not at all. So, if you're listening to this and you're thinking about using leverage, maybe don't. At least not right now.
Yeah.
If you're going to buy anything, consider spot buying and really think about self-custody.
Self-custody, yeah, that's always a good idea. But okay, enough doom and gloom. Let's talk about some potential good news, because there are a few things on the horizon that could actually be pretty positive.
Right, definitely. There are a few things brewing that could turn things around. So first off, remember all that uncertainty around trade policies, the stuff that's been weighing down the markets for ages.
Oh, yeah, that's been a constant headache.
Well, according to Kevin Hassett, the White House economic advisor, he was on CNBC recently, and he said they're expecting to see some resolution on that front early next month, so like early April, which could be huge because it removes a lot of uncertainty.
Okay, that's actually really good news. And that kind of lines up perfectly with something else we've been talking about, which is the end of quantitative tightening.
Exactly. I mean, for anyone who's new to the show, quantitative tightening is basically when the central bank, reduces the amount of money circulating in the economy, which can put the brakes on asset prices.
Right, and so if that's ending and the trade stuff gets sorted out, we could actually see the dollar weaken and interest rates go down.
Potentially. And the theory is that if all of this comes together in Q2, especially after tax season is done, we could actually see some pretty decent market growth.
So maybe all those game over charts we're seeing, for everything from Cardano to Tesla, aren't telling the whole story.
Yeah, I mean, it's easy to look at a chart and see that Cardano is at the same price it was 3 years ago and think, oh, no, this is it. But that totally ignores all the underlying development and progress that's been made.
Right, it's like judging a book by its cover,
All right.
or like one sentence in the book.
Exactly. And speaking of overall market sentiment, we always like to check in on the crypto fear and greed index.
Of course. Where are we at right now?
Well, right now we're deep in extreme fear territory, like down around 17, which, sounds scary. But here's the thing. Just a year ago, in March 2024, that index was up at 92. Like extreme greed.
Wow, 92. So what you're saying is a year ago, everyone was super hyped, and now everyone's freaking out, but Bitcoin is actually higher now than it was then.
Yeah, it's pretty crazy, right? It shows you how quickly sentiment can change and how much noise there is online. Like sometimes the crowd is right, but sometimes it's totally off base.
It makes you wonder if maybe last year, when everyone was so optimistic, that was actually the time to be a little more cautious.
It's definitely a good reminder to not get swept up in the hype. And if we look at Bitcoin's technical indicators about a year ago, its RSI was showing it as overbought, meaning it was probably due for a pullback. But right now, the RSI is showing more consolidation, so the picture is very different.
Interesting. Okay, so Bitcoin seems to be holding its own, relatively speaking, but what about the altcoins? Everyone's wondering when we'll see that big altcoin rally everyone keeps talking about.
Yeah, the expectation is definitely still there. And, a lot of it hinges on those macroeconomic factors we talked about earlier. An increasing M2 money supply, a weakening dollar, decreasing interest rates. Those are the kinds of things that can really fuel altcoin growth.
And for Cardano specifically, there's that big potential catalyst everyone's watching, right? The Cardano ETF.
Absolutely. That could be a game changer, especially as we get closer to the end of quantitative tightening. It could open up Cardano to a whole new wave of investors. Now, obviously, looking at Cardano's weekly chart, we have to acknowledge that more price dips are possible in the short term.
Yeah, nobody knows for sure what's going to happen next.
Right. But think about this. When Bitcoin's ETF was approved back in January 2024, Bitcoin was still trading below its previous all-time high.
Okay.
So if Cardano ETF gets approved and Cardano is also below its all-time high and the altcoin bull market hasn't even really started yet, well, that could be pretty significant.
Yeah, I see what you're saying. So technically speaking, where is Cardano sitting right now?
Well, we saw some resistance around that $1.25 to $1.25 level a while back. So that's definitely a key area to watch. On the weekly chart, we're seeing consolidation right now, and the structure kind of looks similar to what we've seen before previous upward moves, trading below the 20-week EMA, but with support around the 50-week EMA.
And that 50-week EMA seems to be holding for now.
It is. We saw the price wick down to like 758 cents recently, which was right around that 50-week EMA, and the weekly candles have closed above it. But, we have to be realistic. If the whole market tanks, that support could break.
For sure. Definitely something to keep an eye on. And just looking at Cardano's daily chart, I mean, the volatility has been insane.
Oh, yeah, it's been wild. We've seen swings from 0 of 30 cents up to $1.30, then back down to 0 of 50 cents, then up to $1.20 again, and now it's around $1.66.
Talk about a roller coaster.
It's enough to make you seasick, which is why, we always say be careful with leverage. This kind of volatility can wipe you out in a heartbeat.
Yeah, for real. Okay, let's switch gears for a second and look at Ethereum. What's the monthly chart looking like?
So this is really interesting. Ethereum's monthly chart is getting close to oversold levels that we haven't seen since the 2018 bear market low and the COVID swing low.
Wow, really?
Yeah, and what's even crazier is that the current monthly chart for Ethereum is actually lower than the 2018 bear market low.
That's wild.
It is. And when you consider that quantitative tightening is ending and interest rates could go down and the dollar could weaken well, it really makes you question this whole narrative that we're entering a bear market or a recession.
It's like the market is coiled up and ready to spring.
Exactly. And, we've talked about this before, but those who weathered the last bear market and bought Cardano when it was down in the dollars 20, 30 cents range, they're still up massively even with this recent pullback.
It's so easy to get caught up in the day-to-day price action and forget about the bigger picture. I know I do it all the time. It's frustrating to see prices stagnate or go down. But you're right, the long-term trends are what really matter.
And, it's fascinating to see how different investor groups are reacting right now. Like, you've got a lot of retail investors who are pretty scared, which is understandable. But a lot of the OGs, the experienced investors and the people who really understand macroeconomics, they're actually getting more bullish.
That's interesting.
Yeah, it's like they're seeing something that the rest of us aren't. And it makes you think, why would these big institutions and whales be buying if they thought this was the start of a multi-year bear market?
That's a really good question.
There's got to be something going on beneath the surface.
Okay, so just to recap quickly, we talked about how the current fear in the market might be overblown, especially when you look at historical data and the fact that Bitcoin is still way higher than it was when everyone was super greedy last year. We've also talked about the potential for positive macroeconomic changes, like the trade stuff getting resolved and quantitative tightening ending, which could be really good for crypto. And finally, we looked at those oversold conditions on Ethereum's monthly chart, which are pretty significant.
It all comes down to perspective. If you zoom out and look at the big picture, things might not be as bad as they seem.
Right. And, the thing is, if experienced investors are seeing opportunity in this market, maybe we should be asking ourselves, what are they seeing that we're not? Like, what are the fundamental shifts that could be leading to a positive long-term outlook, even if the short term is a little bumpy? That's something I'm definitely going to be thinking about. And, maybe you should too.
Definitely food for thought.
And hey, if you're enjoying this deep dive, be sure to like and subscribe and leave us a comment below and let us know your thoughts. What are you seeing in the market? Are you bullish, bearish, somewhere in between? We want to hear from you.
Absolutely. Join the conversation.
All right, that's it for this week's Deep Dive. Thanks for tuning in.
See you next time.